How to invest in stocks for beginners in 2023. Welcome to this informative video where we will guide you through the process of investing in the stock market as a beginner in 2023. If there's one crucial lesson we learned from the volatility of 2022, it's that being uninformed can lead to costly mistakes. So, our first lesson is don't be uneducated. Throughout history, there have been ups and downs in the stock market, but the overall long-term trend has always been upward. In fact, alongside real estate, the stock market has consistently proven to be one of the best places to invest your money. Now, as a complete beginner, you may be wondering where to start, what areas to focus on, what tactics to implement, and which investments and stocks to choose. These are the very questions we will address in this video. So whether you're eager to learn the basics or seeking guidance on specific investment strategies, let's embark on this journey together, starting from the beginning. First, you need to know the answer to the question, why invest in stocks? Investing in stocks means owning a piece of a business. When a stock needs capital, it sells shares in the stock market. As a stock owner, you become a business owner. The primary goal of any business is to make profits, and by investing in stocks, you benefit from those profits. Your money starts working for you, and you can invest in businesses worldwide focused on making your money. The best part is that stock investing offers passive income. Instead of relying solely on a 9-to-5 job, your investments grow while you enjoy your favorite activities. Investing aligns with Warren Buffett's wisdom of making money while you sleep. It enables you to build wealth and create a brighter financial future. By learning and investing wisely, you unlock the potential for your money to work for you, securing a prosperous tomorrow. Embrace stock investing and watch your wealth grow. So how do we get started with investing in stocks? How to get started? I'll guide you through the steps of starting your investment journey. You don't need to be wealthy to invest in stocks. It is accessible to everyone, even with modest budgets. Don't let the misconception of needing to be a millionaire hold you back. Start investing today and unlock financial growth potential regardless of your budget. Number 1. Find a stockbroker. To buy stocks, start by registering with a brokerage company which facilitates stock trading. Unlike in the past, you now have reputable digital options available. For affordable choices, consider Robinhood or Webull, offering commission-free trading. If you have a larger budget, platforms like Charles Schwab, Fidelity, or TD Ameritrade are well established. Sign up by visiting their websites, filling out forms, and you'll have found a stockbroker. This initial step sets you on the path to investing. Number 2. Basic stockbroker mechanics. After choosing a stockbroker, familiarize yourself with key terms before buying stocks. 3 terms to understand. Ticker symbol, a stock's nickname. Example, AMZN for Amazon. Market order, buying or selling at the current price. And limit order, setting a maximum price. I prefer limit orders for control. Knowing these terms empowers you to make informed decisions when purchasing stocks. Number 5. Investment strategies. After registering with a stockbroker, buying stocks is possible, but having a strategy is vital. Similar to football or chess, the stock market requires a plan. These are the 5 investing strategies for you. Value investing strategy. Have you heard of Warren Buffett and Charlie Munger? They advocate for a strategy called value investing. The idea is to buy stocks that are undervalued compared to their intrinsic value. It's like finding discounted high-quality items when you go shopping. Value investing involves understanding the business, focusing on companies with a competitive advantage, valuing integrity in management, and paying a price that aligns with long-term value. Examples of value stocks include Berkshire Hathaway, Micron, Alibaba, Meta, Seritage Growth, and Occidental Petroleum. If you're interested in value investing, explore these stocks further. Dividend investing strategy. Consider dividend investing as an alternative strategy for steady income. Businesses have the choice to reinvest profits or distribute them as dividends to stockholders. Dividends offer consistent cash flow, typically paid quarterly or monthly. Pay attention to dividend consistency, as some stocks may reduce or eliminate them during economic downturns. To mitigate risk, invest in dividend aristocrats, 25+ years of dividend increases, or dividend kings, 50+ years. Examples include IBM, Coca-Cola, and Johnson & Johnson. Follow reputable dividend investors like Dividend Sensei, PPC Ian, and JJ Buckner for valuable insights. Passive investing strategy. Passive investing is a strategy that involves purchasing index funds or exchange-traded funds or ETFs instead of hand-picking individual stocks. With passive investing, you gain exposure to a wide range of stocks within specific market segments, such as the S&P 500. The goal is to replicate the performance of a particular market index rather than outperform it. This strategy is appealing for those who prefer a hands-off approach or lack time for in-depth research. By diversifying your portfolio with index funds or ETFs, you can effectively spread out risk and achieve steady, long-term growth while avoiding the need for active stock selection and frequent trading. Growth investing strategy. Growth investing is an aggressive strategy suited for risk-tolerant individuals. It involves investing in high-risk, high-potential companies, driving innovation and technology disruption. Growth stocks like Amazon, Apple, Tesla, Netflix, Alphabet, and Meta have experienced rapid growth. Timing is crucial, as entering early in a strong cycle is advised. However, given the current market conditions, caution is warranted. Notable growth investors include Cathie Wood, who have faced challenges recently. When adopting a growth investing approach, be cautious and be aware of the significant hurdles it may encounter. Volatility investing strategy. During uncertain times, volatility investing becomes appealing. Investors like Michael Burry thrive in such conditions, as seen in The Big Short. Volatility investing involves shorting declining stocks or riding rising stocks, as George Soros does. This approach carries risks and requires constant vigilance, but can yield significant returns if executed correctly. 12 stock ratios to learn. Feeling overwhelmed by the numbers on stock websites? Let's simplify. Here are 12 key ratios and metrics to understand. Price per share. Cost of a single share. Market cap is the total value of a business. Dividend yield is the ratio of stock price to yearly dividend. EPS, or earnings per share, is the profit generated per share. P/E ratio, or price to earnings ratio, is the valuation of a stock. Price to book value is the comparison of stock price to net assets. Return on equity is the percentage return on owner's equity. PEG ratio, or price over earnings to growth ratio, is the value relative to growth potential. Revenue is the total income generated. Earnings is the profit after deducting expenses. Debt to equity ratio is the comparison of debt to equity, and the current ratio is the assessment of short-term liquidity. Understanding these ratios helps assess a company's financial health and make informed investment decisions. 11 key sectors to invest in. To make informed investment decisions, it is crucial to identify sectors who are likely to perform well. Here's a breakdown of the 11 key sectors. For technology, we have Apple, Microsoft, NVIDIA, and IBM are involved in technology-related businesses. For financial, JP Morgan, Wells Fargo, AIG, and Chubb are part of the banking and insurance industries. Communication services, Google, Meta, formerly Facebook, and T-Mobile provide communication-related services. For consumer cyclical, Amazon, Tesla, and McDonald's sell non-essential goods. While for consumer defensive, Walmart, Costco, and Target produce essential items like food and beverages. For healthcare, this sector covers a wide range of healthcare services and pharmaceutical companies. For industrials, Boeing and others offer support and services to industries like manufacturing and shipping. For real estate, commercial and residential properties, real estate development, investment, and management are part of this sector. For energy, it includes oil and gas companies involved in exploration, production, and distribution. For basic materials, mining, chemicals, and construction materials are key areas for companies in this sector. For utility, companies providing essential services like electricity and water fall into this category. Evaluate your understanding and predict the performance of each sector over your investment horizon. Build a portfolio aligned with the sectors you comprehend well. How to study a business. Congratulations on staying engaged until the end of this video, showcasing your dedication to learning. Before rushing to buy stocks, it's vital to study businesses thoroughly. Take Apple as an example. Understand their revenue streams, including iPhone sales, Macs, wearables, and services like Apple TV and iCloud. Buying Apple stock means becoming a part owner, so assess the potential of these income segments. Will more people buy Apple products? Are wireless headphones performing well? Think like a business owner. Observe consumer behavior and analyze preferred products. Focus on understanding businesses and predicting their future success, rather than getting distracted. This knowledge benefits both your investments and overall financial well-being. Plan for market swings. The stock market is unpredictable, and success requires maintaining control rather than being influenced by market trends. Many investors fall into the trap of greed during market highs and panic during downturns, resulting in losses. To avoid this, create a well-defined game plan. Outline your response to market fluctuations, such as selling for higher prices, staying calm during recessions, or continuing to buy during lockdowns. By addressing these questions and approaching the market rationally, you can navigate its fluctuations effectively and make sound investment decisions, increasing your chances of success. Buy stocks, but start small. Don't let information overload stop you from making your initial investments. Being too meticulous leads to indefinite waiting and financial stagnation. Start slowly with passive investing in index funds and learn along the way. Approach investing wisely to enjoy its benefits and profits. Armed with this knowledge, you're ready to begin your investment journey. You've learned strategies, important ratios, and essential guidelines. For a deeper understanding, join the Investing Academy, explore expert insights, My Stock Portfolio, and expand your investing knowledge. Investing is crucial for wealth preservation and financial freedom. Develop a passion for it and generate substantial profits.